Revenue expenditure. Any expenditure that give you the full benefit for one accounting period will be termed as revenue expenditure. Now we will discuss our first topic of the chapter, that is capital expenditure. It is incurred when the business spend money to either buy a fixed asset, means capital expenditure says in the simple word that when we are going to spend money for a business house for a longer period of time and which are going to give us the benefit for a long period of time, that will be the part of our fixed asset, that is capital expenditure. Second, add to the value of existing fixed assets. Suppose like in our company, in our manufacturing unit, we are having 7 machinery, but we need 10 more. So when we are bringing those 10 new machineries, that is adding up in the value of our fixed assets, and that they will become our capital expenditure. All the amounts that has been incurred in buying those fixed assets will also be part of our capital expenditure. So, bringing them to the business will also be termed as our capital expenditure. If we are going to make the legal cost, like the documents required for purchasing those assets, will also be the part of capital expenditure. Suppose we are buying that machinery from some foreign country, so all the legal cost for importing them in our country will be the part of our legal cost. Carriage inwards on machinery board. Loading and uploading of that particular machinery in our manufacturing unit will be included in our capital expenditure. Any other cost that is needed to make our fixed asset ready for use, that will also be part of our capital expenditure. For example, you can say you want to install that machinery in your manufacturing unit, so those installation charges will also be the part of your capital expenditure. So, in a simple term, you can say capital expenditure is the expenditure which is used for long period of time and which is going to give you benefit also for a long period of time, and all revolve around fixed assets. Means whether you are purchasing totally new fixed assets or for adding up in the value of that existing fixed assets, or the charges that are to be done for the installation and carriage and cartage of that particular fixed assets will be the part of our capital expenditure. Our second topic is revenue expenditure. Revenue expenditure is the expenditure which is done for our day to day activities in the business. So, which does not increase the value of fixed asset, but which is helpful in the maintenance of that particular fixed assets. We can take some points which I am giving you are as follows, like expenses incurred in day to day business activities like wages, salaries, rent, postage, etc. Suppose we have to pay wages to our workers on daily basis, that will be part of my revenue. Salaries to my employees, whether on monthly basis, that will also be part of your revenue expenditure. Or rent for the building in which your office is running, that will also be part of my revenue expenditure. So simple way, the expenses you are doing in your day to day activities of the business will be part of revenue expenditure. Suppose you are buying goods for resale or raw material for manufacturing, that will also part of our revenue expenditure. Let's take an example, like I have to produce sugar. So for producing that sugar, I need sugar cane. So that sugar cane will become the raw material of my manufacturing unit. So if I have spent money on buying sugar, the raw material for my finished good, that will be the part of revenue expenditure. And again, for maintaining all those fixed assets, we have to do the repair and maintenance of that. Like I have machinery, so daily maintenance of the tools, daily grilling, daily greasing of the tools, nuts, bolts has to be done. Electricity maintenance has to be done for that particular manufacturing unit. That will be the part of my revenue expenditure. Now we come to the depreciation. Depreciation, we know, means by regular or normal wear and tear of fixed assets is called depreciation. So as follows: whenever the depreciation on fixed asset is charged, that will be the part of my revenue expenditure, except one, that is land. Land value is never depreciated, it is always appreciated. That's why land will be not the part of our revenue expenditure. If you have borrowed loan for running your business, so you have to pay interest to the bank or to any financial institution from which you have borrowed that loan. So that interest will be the part of our revenue expenditure, because that you have to pay monthly, yearly, quarterly or half yearly. So that will be the part of my revenue expenditure. Now the legal charges has to be incurred when you have to collect money from debtors, and for the damages of the machinery or your building, that will also be part of your revenue expenditure. So in today's class I have covered the glossary words and the two main topics, that is capital and revenue expenditure. So at last I am giving you the PDF file in which all the glossary words, capital expenditure and revenue expenditure has been again explained in a manner which is very useful for you. So after that I have given you the exercise that you have to done on the basis of the topic which we have discussed today in our class. After doing that, I have given the homework that you have to read and write all the glossary words, do all the questions that I have given you in the exercise, and answers to these questions I will discuss in my next class, and I will send you the PDF file also in which you can find the answers for these questions. So, all the best, enjoy your work and do the best. Thank you. We will meet again.